Hi guys, welcome to my YouTube channel. My name is Ray. A lot of you guys know me as FS Professor. So in this video, I'm going to be running through one of my recent trades that I took recently. I took this trade on the 1st of July and it's been running for about 7 days, 7 trading days now. And it's been an amazing trade because this particular trade has done over 350 pips in profit, about, yeah, over 350 pips in profit and about 38,000 pounds in profits. And this is the trade you're looking at right now. This is the chart of the trade you're looking at right now. So one of my staff suggested I should make a video on the analysis behind this particular trade, that it might help people understand my confluences, what I did to come up with this setup, what I did to come up with my entries, and yeah, and maybe also what I went through while I was holding the trade. But I'm gonna say I did not really struggle holding the trade because it's just a week. To be honest, I have held trade for like 3 weeks, 4 weeks before, so holding a trade for a week is not really something I am going to struggle with. And if you've been following me for a very long time, you would know that I have done this repeatedly over the years. At least I've been doing it for more than 5 years now. So if you're uh, s- uh, a new trader on my YouTube, I would appreciate if you subscribe to my channel, or also you might also want to follow me on Instagram, fx.professor, where I share my daily insights, my trading setups, and markups before, during, and after. So you don't want to miss that. So follow me on Instagram, subscribe to my YouTube channel. I would appreciate that for sure. So without wasting too much of your time, I'm going to run you guys through the analysis behind this particular trade. So what I'm gonna do is I am going to cut this out. Let me just cut it out around here. Okay. So what happened? I spotted the first thing that happened was I saw my demand level and I highlighted my demand level around here. So that turned to be my point of interest. So I was expecting price to extend to the downside into my POI, where I am going to, you know, take my entry. There are some things I like to see. There are some criteria I like to follow before I consider a level, a high probability level for me, or a high probability setup. I like to identify my demand or supply. I also like to see liquidity resting below uh, my supply and above my demand. In this case, here is my liquidity, but you can't see it properly because I've already cut down the chart. So when you start playing, you will see properly. And also, I like to see fair value gap around my order block just to make it a high probability setup. But this particular one, um, there is no fair value gap around it. So I did not consider it to be a high probability setup, but I was also looking at that POI closely for my entry. If there was a fair value gap around it, I would most likely set a buy limit order, which I really don't do. I like to see reactions around my POI myself. And because of that, I have missed so many amazing opportunities where price will just tap into my zone and boom, just go like that. But I really don't. That's just how I like to trade. So on a normal day, I would have loved to set a buy limit order so I don't miss it. But because, like I said, there is no fair value gap, and this particular setup did not meet my criteria, even though is I will call it uh, a B setup for me, not a B setup. So I decided to wait to see for how price would react inside my point of interest. So I'm gonna play this and let's just follow me. So now price start to form, approaching my POI closely, and here it formed that my liquidity level here, around here, or inducement, whatever you want to call it, around here. Then I identified that. Then I was still expecting price to tap into my point of interest, which it did eventually. Now, I didn't take my entry on a 4 hour. I took my entry on a 30-minute time frame. If you did on a 1 hour, that's okay. That's fine because you could take your entry after this pin back closure around here, which is almost my entry, to be honest. Because if you look at it, right? Okay, I took my entry way before the closure because I took mine on a 30-minute time frame. So it was on a Monday morning, and what happened was I lowered to smaller time frame. So I started watching closely on a 30-minute time frame. While I trade, I pay attention to my candlesticks. A lot of people don't really do that, but I pay attention to candlesticks as exhaustion. Because inside my POI, I like to look for candlestick exhaustion. I like to look for buying pressure, anything that indicate that buyers are creeping into the market. So because it was morning, I did what? I switched on my Asian range, right? And for those that do not know Asian range strategy, it's pretty much where you trade the low or the high of Asia session because we believe uh, liquidity are always resting right above or below the Asia open and Asia close. So right here we have the Asia open and we have the Asia close. Uh, Maybe this is the open or close, I don't know, but we have the high and the low of the Asia session. So what happened was price decided to take the Asia low, this low right here. Take the Asia low. A lot of people would like to take a buy once the close the low is taken or once the buy is taken. But like I said, I like to see candlesticks exhaustion. And one thing that made this setup later made it a high probability setup for me eventually is because I like to see my Asia lows taken inside either. Okay, if it's a low taken, I like it to be taken inside my demand level. Remember, here inside this grating is my demand level, and my Asia low is being taken right into my point of interest, which makes it now a high probability setup for me. So it took the lows into my POI, and what happened next? I start to see a lot of candlesticks exhaustion. You can see this candles here, this pin bar, pin bar, pin bar, pin bar, and boom, all of a sudden a bullish engulfing candle, and it closed at the same high as the previous candle. So after this closure right here, I took my buy trade. As you can see, 142.969, which is also going to tally up with, as you can see on the screen, it tallies up with my entry. So I took my trade right immediately after this close here. So three confluences, my demand level, my Asia load taking, and also my Asia load taking into my point of interest. And the last, okay, four conferences actually, and also candlesticks exhaustion because the candlestick exhaustion is showing me buying pressure, like buyers are now trying to creep into the market. So I took my trade and let's go back to 4 hour time frame. And inside this 4 hour time frame, uh, you can now see closely the market is now pushing to the upside. And I identify this level around here as my area of liquidity where I expect price to go into this level. I also identify this supply level where I intend to take my final profit. So initially I was meant to close all my trades around here. But like I said, when price is approaching my point of interest, I like to pay so much attention to exhaustions of the candle. So if whenever price gets into this level and I start to see selling pressure or structure change or it could be anything, then I will then close my trade manually because I don't like to use take profit. Now let's go. Let's play this. As you can see, it's still consolidating, pulled back a little bit, more of a retracement, and boom, all of a sudden took out this liquidity here, retraced a little bit more. Normally, the way I like to trade on on the normal day, I would have scaled up. I would have scaled up because I would have done something like this, maybe take entry somewhere around here, put my stop loss way below, or maybe I would have been stopped out, but I would have scaled up, but I didn't scale up. Anyways, so price is now approaching my take profit target. And here I was now watching for candlesticks exhaustion. As you can see, the 4 hour closure right here close as a bullish engulfing candle. It's not showing me any form of weakness. It's not showing me that sellers are trying to creep into the game, into the market. I couldn't say anything like that. So we have this bullish engulfing candle and this 4 hour candle as well. And it's telling me I think the buyers are still strong, and I decided to hold. And you can see another bullish candle, and I held the trade. I extended my take profit to this high over here. And as you can see, it's still pushing. And this is currently where we are over 350 pips in profits, about 38k pounds. And I'm still holding. I will be looking to take my profit around here, which is about 80 pips if I'm correct. But then I'm still going to be watching closely for any change in direction. If I spot anything, I will be out of the trade. So this particular trade, uh, it's been an easy one because it kind of played okay. I hold ahead for about 7 trading days, so it's not really psychologically and emotion wise. I think I held myself together very well because it moved very well. It moved very well. I understand after every impulsive move, there must be a correction. So after this impulsive move, we had a correction. Impulsive move, we had a little correction. So, I don't think I struggled with holding this trade, because I've held trades for about 800 pips before in the past, and I think 900 as well. And if you're following me, if you've been following me for a long time, you would know this for sure. So that's the analysis behind this particular trade. So thank you guys for watching, and I hope you're able to pick one or two things from this video. And if you're watching me for the first time, subscribe to my channel, and somewhere in my description you will find link to my Telegram and also my Instagram. And yeah, thank you guys for watching, and I will see you guys in another video. If you have questions, you can drop them in the comment section, and I'm very happy to answer them. Have a good one, guys. Take care. Bye.